Evening, everybody. How you doing? How you doing? So today, I didn't take any trades, and there was a setup that I just watched it play out in front of my eyes, mainly because I wanted a deeper retrace. And I'll go over today's price action and kind of my takeaway from today. All right. So for context, right, I understood that today I had a bullish bias coming into the day, right? So if we just look at before market open, right? We were riding that view up, right? So the overnight view up, right? We got above it. We retested it once during Asia, respected it, and then respected it once, twice. Try to get below it during pre-market, and then respected it again. But the only thing that was kind of like conflicting for me, but didn't really hold that much, I guess, weight in my eyes, is the fact that we got into this resistance zone, which is this 4 hour fair value gap, which we've been respecting for quite some time now, right? So it's this 4 hour gap right here, and I kind of marked out the low volume node itself. So this 4 hour gap has held once, twice, three times, and this would be the fourth time if it does end up holding it. We now know that it did, so it held it four times. I saw it as this resistance area shouldn't be as strong if we're testing it for excuse me, Jesus. If we're retesting it for the fourth time. So I figured, okay, we're bullish, right? We've been having pretty good bullish structure this week. Like if you just look at the start of the week, we've been bullish since the PM session on Friday, right? And then we continue making higher lows, higher highs. So it looked bullish to me, right? And the previous day's range stat. So if you go to the daily chart and we just remove our drawings, right? The high of Monday was technically broken on Tuesday. So this makes it a bullish stat because we broke the high. So we expect this candle to close green. It ended up closing red, which is not part of the stat, but it's at the end of the day, it's a statistic. It's not a 100%. So this is simply one of those days where it's not at the favorable side of the statistic that we look at. It's also not really like this right here. It's not really like an uptrend. So you could see this as like, okay, then maybe this stat is not holding that much strength because we're not on a clear uptrend. But other than that, I mean, to me, it was looking bullish. Like this was looking good to crack these highs and then just continue to make new all-time highs, maybe sometime soon. But we'll see because now it doesn't really look like that anymore. But yeah, that was kind of my context. I said price looked like it's been continuing the trend from yesterday's PM session. So yesterday's PM session would be this right here, this up move. So we consolidated a little bit, broke out, and then we've been continuing up. So it looked like a pretty solid trend day. I expected it to be a trend day. And then we've been holding overnight VWAP. We got above previous week's point of control, which is this big red line right here. We got above it. So we got above it here, then failed, then kind of like consolidated a bit at that point, and then we broke out above it. Then we also, we're also sustaining above previous day's high, or at least that's what it looked like in pre-market. And then we're currently trading above the value area high for the current week. So if you draw a volume profile just for this, right? We're trading above it. We're trading, so just a volume profile from the start of the week to where we are now. We're above the value area high, right? And then looking at the volume profile for the session, as usual, right before open, this is pretty normal for us to see price kind of in the middle of the value area. So nothing really valuable there. You could see it as like, okay, if we reach the value area high or low, are we breaking out or are we like sweeping that in and then reversing? it could be an additional confluence, depending on how you like to use it. I like to use it for either or, whether it's for a sweep and then a reversal, or for us to see a breakout and then a continuation. Either or can work pretty well, depending on your framing. But yeah. And then I just decided to wait for open. So I had a bullish bias coming into the day, and then off open, we see this dump. Like off open, the first 15 minutes, I want to say it was the first 15 minutes, maybe. Yeah, we dumped 143 points of the first 15 minutes, and then we ended up dumping 200 points. So once we get there, I'll slow down a bit. Yeah, so here we've dumped 213 points, and I was like, all right, gotta be very patient and wait to see any structure forming. So yeah, that's pretty much it with that. I was just like, okay, looking at bookmap, this looks like very aggressive selling. It didn't at first. It did look like a bit of a manipulation. Like, okay, we were sweeping Asia lows, but then I looked at bookmap. I'm like, wait, no, this looks more like a sell off than a manipulation leg. So I figured, okay, I don't really have clear levels to trade for longs. You could say this 1 hour gap, which did end up holding, and you could have could have caught a pretty solid trade, maybe a 1R, 1.5R. I know the IFVG strategy did present a bit of a model here with the resweep of the initial low. Me personally, I didn't take this. I decided to just wait it out a bit more. I was just like, could look for a retrace to short and then target pre-stays low. So pretty significant draw on liquidity all the way down here, pre-stays low. And yeah, I was like, this is probably the move. We had good momentum off open, and we ended up forming this 15-minute. So I think now it's formed. We'll see. Yeah, now it's been formed, I'm pretty sure. Yeah, now it's a 15-minute gap. Spoiler alert, we do trade into it. But I was looking at this, and then I marked out the fit levels for the New York range, so high to the low. And then I figured, okay, what do we have here? And I was seeing a few things. We left like 3 low volume nodes along the way, and I marked them out on bookmap. The first one didn't really look good because it didn't align with any fit levels. It didn't align with VWAP. The second one aligned with the 382 New York VWAP, or at least it was very close to it. So I figured this could be a pretty good spot for a trade. But I thought to myself, this doesn't look like a clean retrace. To me, it didn't look like a clean retrace for me to try it. So I was like, you know what? Maybe I'll wait for a deeper retrace, maybe a 618 or 0.5 with overnight VWAP. That would be nice. Maybe a deeper retrace into this 15-minute. And then we actually ended up reaching this. And then here, when this happened, a few interesting things happened, right? So we reached the 382 fib of the New York range. We reached a low volume node created off the dump, and we're right above New York VWAP. And I'll show you what that looks like on bookmap and on a tick chart, which are both pretty good indicators to see how we're actually behaving at those levels. And this is pretty much what bookmap looked like. So you can see in the SVP column, this is a low volume node. You can clearly see the 2 peaks and the valley, right? So that's your low volume node. Also, you guided myself with price to mark it out. Aggressive selling right above VWAP. And we know the 382 is at 645, right? 645 is somewhere around here. So it's right above that 645. So it's like the New York VWAP and the 382 align pretty well, but we had the low volume node like right above it. Right above it. It's not that much of a difference. It's probably like a 5-point difference. So I saw this and I'm like, okay, cool. At first, if you can see, we actually broke through VWAP, and I think I heard someone go long here. or one of my friends on the call was going long, I was like, yeah, longs do not look good for me. Like I don't see it. I really don't. I understand what they're seeing. Like we're reacting off of a 1 hour zone they had marked out. It's a fib level or close to a fib level on high time frame range. We're breaking New York VWAP and stuff like that. So I was like, yeah, this doesn't look good to me. So I kind of just took my hands away, took my hands off, and I just watched that play out. But what did we see here? We retested it once, twice, and I actually took another screenshot to see kind of a more of a close up of what actually happened there. So we saw some offers getting filled, right? Um, and we saw fail buying, fail buying, fail buying, right? And we retest VWAP once, twice, three times, and then on the fourth time, or you can see that as two times, as this being the third time, where it actually gets broken through, retest it again, and broken through again with aggressive selling. So I saw this as we're seeing a fail buying followed by aggressive selling that broke back below the New York VWAP. And if you look at it on a tick chart, it looks very clean. And I'll show you right here. I actually added the confluences to kind of give an idea. The low volume node it goes a bit higher, but this is like the start of it. This clearly shows the same thing as bookmap, but on a cleaner chart, which is just candlesticks, which is what everyone's used to. So this looks a bit cleaner, right? So the 382 is a green line, the red line is a breaker structure, and that little light blue line is New York VWAP, and this red box is the low volume node. So we get above VWAP, retest it, hold it, retest it again, hold it, retest it again, hold it, and then when in the process of retesting, we're holding that low volume node. What happens right after? We're also like right at the 382, kind of stalling out there. We form a base and we break. So I see this as a break of structure on the tick chart. Enter there, stop at the high that we put in, and use target low of day. So that's what this entry was. So you get in and during this candle forming. This is a 5-minute chart, and the entry happened while this 5-minute candle was forming. All right. So obviously your entry is a little below. It's actually at the 38s, if I'm not mistaken. Yeah, 38s. Stop at the 60s because that's actually what the high is. So it's 25,660s. If you see up there, 25,660s, like all the way up here, is the high of the candle, right? And you just target low of day. So at this point, this would be the 45-minute IB low. And then I'm pretty sure this gets really close to the target, then stalls out a little bit. Maybe you want to wait a little bit longer. Okay, we're seeing good movement. And then you get your target hit. Maybe you want to go to the 1-minute chart, see if that actually shows how the entry played out. This displaced, then stalled out, then displaced again. So this, once again, tick charts showing us the power of having tight stops, right? We're talking about a New York open range, so like just the first hour, not even the first hour, the first 30 minutes of New York price action is a 219 point range and a tick. Pretty massive range for the first 30 minutes. It's not something we haven't seen before. We've seen it before, right? If you've been trading NASDAQ long enough, you've seen this before, where the first few minutes are pretty massive. And the fact that you're able to get a 22 point stop for a almost 77 point move, that's pretty nice. And that would have resulted in a 3.49 R. I personally didn't like this trade at first. In hindsight, I'm like, this is A+. And I didn't like it at first because I feel like part of me got influenced by what the other people on the Discord call were saying, right? How they were looking for long. So I'm like, I don't really see it. I can see it, but it's like shorts are favorable. Like off of this momentum, I don't want to long this. I don't want to try to catch the bottom of this move because I want to see clear structure form. This right here is not clear structure forming. We could easily resweep this low and then continue, maybe then continue lower or continue higher. Either way, whatever happens, happens, right? But to me, I'm like, if we get a solid retrace, I'm shorting that. And I wanted to see a deeper retrace. I wanted us to see actually revisit this 50-minute gap, which we did by like 2 ticks, I think. If we look at the precise measurements, so like the gap started at 657.75. The height of this candle is 660. So 2 points and a tick is how much we actually got into that gap. Barely tap into the gap and then immediately displays lower. This just goes to say, you gotta recognize an A+ setup when you see one, and what makes this A+ is we're following momentum, right? The overall trend for the past couple weeks is still bearish, right? So you're following technically still the higher time frame trend. You could say like, oh yeah, but this week we're bullish. Yeah, but the past like 2 weeks before that have been bearish, right? Just look at the higher time frame. Like look at the 1 hour, zoom out. What does this look like to you? High, low, lower high, low, technically higher low, lower high, lower low, lower high, lower low, lower high, lower high, lower low, lower high, lower low, and then you could see that we still haven't broken these highs. We barely swept this one, and then just got more movement to the downside. So maybe, if we see this sweep, maybe that's something you'd be interested in. Maybe you're like, okay, this sweep could take us lower. Maybe that made you bearish for the day. Maybe the resistance just made you bearish. I personally wanted to see bullish because of recency bias, because we've been bullish like recently. But once you see this momentum, regardless of whether this is high time frame continuation or you think of this as a high time frame retracement, it is clearly a medium time frame continuation. Something that I've talked about before is how the type of trades that I look for, right? And if I go back on my notes here, I'll probably find it really quick. Let me see where it's at. There we go. So ideally look for high time frame and medium time frame continuation. Depending on your high time frame bias, this was both of those. If you think of it as a retrace, it is a clear medium time frame continuation, which is another thing that I said. High time frame retraces are best with clear medium time frame continuation. So yeah, that's pretty solid, and it's not even a medium time frame reversal. It's a low time frame reversal off of a medium time frame continuation. And it's like, and going back to that lesson, that if you're looking for a certain type of trades, right, you're like, I want to see this. The market doesn't give a crap about what you want to see. It'll do what it wants to do, and that's the way it's supposed to be. And you got to do your best to find those opportunities, make the most of them, right? You wanted to see a deeper retrace. Yeah, you're not getting it today. And something my mentor did point out was like, why didn't you take this? Like, this looked like a freaking solid setup. And it's like getting an understanding that whenever we have this like insane momentum moves and you get a small retrace, the 382 is a pretty solid level to trade off of. Like the 0.5 and the 618 are pretty much unlikely to get hit off of the first retrace. So you gotta make the most out of those small retraces to join in on the momentum. And you're like, okay, yeah, that makes sense. But okay, if it's good momentum, it's only a 382. What else makes this a great setup? 382 of New York Fib range, like we said, right? Low volume node created off the dump, aligning with New York VWAP. Those are three confluences right there. Three entry confluences. Then for confirmation, failed buying followed by aggressive selling that broke back below New York VWAP and a tick chart break. So many freaking confluences in alignment. And that's why I'm saying like that's the entry, because that's where all of those come into play. You see the failed buying. That's after the aggressive selling has stepped in. So it's not like you're anticipating the aggressive selling. You're seeing it step in. That's where we're getting the tick chart break. You're waiting for the tick chart break, and you've seen the break and small, like very quick retest of New York VWAP. That's what makes it an A plus setup. You have like triple confluences in alignment, and then for entry confirmations, you have all of them. And like I said in the past, once again, with this, like just entry confirmation, right? Combine at least two. It has three. The more the merrier, right? Like low volume, no high volume mode, fib levels, VWAP, CVD and volume. We saw absorption with the failed buying, right? Tribe participants failed buying and follow through. It's just, whew. Like this trade had everything, and I just didn't realize it. That's all I can say about why I didn't take it. It had everything I needed, and I didn't take it. It was an A plus setup. I did not realize that in the moment. It was a solid freaking RR. Even just the freaking fixed 2R. This would have played out for a 2R within less than 5 minutes. Let's look at a 1 minute chart. See how fast that actually played out. We would have gotten in on the formation of this candle and gone out in less than 2 minutes. Less than 2 minutes for a 2R TP. And the actual final TP for the 3R happened in what, like 24 minutes? Is that it? Plus 20, 24. 24 minutes. Which I honestly think is pretty good. You could have also been like, you know what? I might actually send my TP to this unfilled 50-minute partial at that 2R, and then fully exit at that unfilled 50-minute. Lesson to learn. The market, well, lesson to reinforce, because I've learned this in the past. The market does not care about what you want to see. It'll give you opportunities, and you gotta do your best to frame those trades, align your confluences, actually build a context, build a narrative, and you'll catch great trades like this one right here. If it's there, take it. If it's your model, it aligns with your strategy, it aligns with your rules, freaking take the trade. If you're afraid of losing, welcome to trading, bro. It comes with it. So, me personally, this trade, it wasn't really about the fear of losing. It was more about I didn't think it was my model. It was clearly my model. Clearly my model. We also had IB in alignment. So, yeah. Pretty interesting day. So, we learned our lesson today. Now we know this is what an A plus setup looks like. Triple confluence and a lot of entry confirmations in alignment. We've seen the tick chart break. I'm still going to be using it because it's... I don't know, man, but whenever a setup like this presents itself, it's been paying pretty well. I'll say that. So, yeah. Anyways, hopefully I'll catch you all tomorrow with a banger trade. If we look at our calendar, I don't think, yeah. Well, tomorrow, still empty. And just to kind of give a spoiler of what's been happening, whatever the frick this was probably off of hearing about Trump signing the market, the government shutdown coming to an end. I think he's signing that tonight. but we'll see. We'll see if tomorrow we actually want to be bullish and we finally want to break this. All this, take all this liquidity. We'll see. We'll see. But anyways, that pretty much wraps it up for today. Not much to say other than that. And hopefully I'll catch y'all tomorrow with a banger trade. All right, y'all. Peace.